Talking to Gene Munster right now for more on Apple's monster quarter. He is an analyst at Piper Jaffray, and he joins us by phone from Philadelphia. So, Gene, good morning. You heard Chris run through all the numbers, this monster quarter from Apple. In your note this morning, you say that investors are getting numb to Apple's impressive results, and the stock should actually be rising even more in response to these blowout results. What level should it be trading at?
I mean, we think it should be above 600, and part of the reason is that, yes, they had these impressive results. $7 billion in revenue upside was the same amount of just total revenue they had in the December 2008 quarter. So these are really staggering results, and the bottom line is what really should be driving the stock is these results are evidence that 2012 is going to be a monster year. And the reason is that 70% of the iPhones sold in the U.S., we estimate, were to existing iPhone users. And as that upgrade cycle gains momentum, these even higher numbers today will likely have upside. And so if investors understood that and they weren't numb to that, the stock should be a lot higher than it is this morning.
All right. You have a price target of 670, the second highest among the analysts that we've surveyed. Apple, as you know, tends to be very conservative, very cautious on the outlook, the guidance. It tends to underpromise. It said 2012 revenue, though, will top the consensus. On the earnings per share side, though, is still trailed. Is there a read into that? What can we derive from that?
Really, you can't read too much into it. And the reason is that over the last 4 years, only one time have they accurately predicted a margin as bad as that they've guided to. And so typically they outperform it. And if you're going to ask us to guess, it could be as much as 4 to 5% of upside to their gross margin that they guided to for this March quarter.
Right. Gene, I'm going to ask you to kind of hypothesize, look into your crystal ball here a little bit. What does Apple do to maintain its edge? Tim Cook clearly getting off to a very strong start, but as we've seen from Research in Motion, it's a quick drop from first to last.
It's really simple, and it all comes back to this upgrade cycle. 5 years ago, when Apple launched a phone, they said their goal was to create a phone that people would buy multiple times. And when we surveyed consumers, they didn't have any brand loyalty on phone. And so all they need to do is keep that high rebuy rate. We think it's as high as 94% in the U.S. If they do that, just given the natural growth of this phone market, that should drive upside to the 2012 numbers. It's really that simple. From the innovation standpoint, we're at CES a couple weeks ago. We talked to component suppliers. We believe Apple's working on an actual television. They denied it or more or less denied it on the call last night, but we think that that's still coming. And I think that that's going to be an important part for the multiple of Apple stock, just because investors need to see some innovation beyond just the real engine, which is the iPhone.
All right, got it. Thanks so much. Gene Munster, senior research analyst at Piper Jaffray, joining us by phone.